Analyzing the overall market trend is much more easily assessed when knowing what the signals and patterns are doing and what the confirming indicators are doing. As we can see, there was a bunch of dojis up here in the NASDAQ as the stochastics were in the overbought area. It had run up, but notice it always kind of stayed above the T line until we had a doji followed by a gap down through the T line, and after that they couldn't trade back up above the T line. With stochastics heading down, this was a strong implication that we were in a downtrend. Today we had a positive open on the NASDAQ, but it failed right up here at the T line. So when it started selling off, that pretty much told us that investor sentiment was still negative. They couldn't reverse it. We're still in a downtrend. Obviously, the next target right now is seeing whether the markets are going to hold at the 50-day moving average. If you apply that same scenario to the Dow, which had been doing dojis and holding up above the T line, not showing any great selling pressure until today. So this tells us there's now a different dynamic with them closing that far below the T line after 4 indecisive trading days. Once again, our downtrend is probably going to be back to the 50-day moving average, somewhat coinciding with this support area. This makes analyzing, or the candlestick signals make analyzing the movement of the overall market much more easy to read. And candlestick charts are very easy to analyze anything you're looking at. Gold prices, as you can see, is in a big fry pan bottom. It was moving positive today. This made our assessment of Nugget, the gold miners bullish three leveraged fund, still a strong prospect for heading higher, as well as individual gold stocks such as AU, Doji Gap Up, your best friend, a good indication that this uptrending channel is going to be, the price is going to come back up into that channel and continue on a 45 degree. So even though the market is selling off pretty hard, you can still analyze which sectors and stocks are acting the best. Same assessment for crude oil. Crude oil came up, tested the T-line, did a bobble, which is a very simple candlestick pattern, failed at the 200, pulled back to the T-line, couldn't close below that level, came back up through the resistance level of the 200, telling us there was more upside. A bobble is kind of a more defined J-hook pattern where you can see exactly what's happening at support and resistance levels. So with crude oil prices moving up, it provided bullish confirmation or bullish opportunities in crude oil or energy stocks that were also doing the same type of pattern, a J-hook pattern. So candlestick signals and the analysis of what the underlying entities, such as individual commodities or the overall general market, is much easier to analyze based upon what the patterns and the signals are doing. That'll be it. We'll see you in the chat rooms.